All right. Good morning, everybody. Here we are again, back at it. Lots of indications that the hurry up and wait that we were looking for into Friday is coming closer for various reasons. Not the reason that we're waiting on for Friday, which is economic data, but we're also all looking at the clock and the deadline for the energy crisis, the Middle East. So this whole week could be a bunch of just sitting around waiting for a move that never happens. And on the other side of that, one spark could send us moving. Uh, Tricky to play for sure. Day traders don't really have much of a problem with it. It's the swing traders that are really going to struggle. So we got a mixed market. Small caps down near 0.75%. Then the Nasdaq behind that. When the small caps lead, whether to the upside or the downside, a lot of times we see them take a back seat into the open, and then the Nasdaq outperforms. So keep an eye on those two and see if that shapes up again. It's just a bit of a dichotomy that we've seen over the years. It's worth kind of paying attention to. Japan close to flat, but slightly positive. Hong Kong up 0.5%. See how that changes through the morning. We're going to get some economic data today, which I really don't see as much of a deal. Durable goods, the numbers are a little off. That can cause some shenanigans for sure, but as you can see, it's from February, it's delayed. The bigger issue is the 8 p.m. deadline tonight. We got some auctions today, but it's not the big ones. The 1 p.m. auctions are really the ones that I have found cause the most movement in the market, but still, these smaller ones do provide insight and often mess with the Fed watch. So keep an eye on them. I wouldn't expect too much. We got some Fed speakers too, but they've been singing from the same hymn book. A lot of them are just talking out the side of their neck, moving their lips without really getting any new sentiment across. They're just repeating the same thing over and over and over again. This is the deadline that everybody's looking at. Now he's moved the deadline multiple times. Who knows if it's going to be moved again, right? There's already a lot of talk about the taco trade, and he's going to, extend it again, but we just don't know. So, you want to be prepared for it not to get extended because at some point, we're going to have to come to a head on this. Yeah, I believe it's 8 o'clock tonight when the deadline runs out. So crude is still elevated. We've got this previous level back here that we haven't gotten into yet. It's around the 130 area, 125, 130. We're getting close to that, but we're just not there yet. So there's still room to the upside. At some point, it will go high enough that the solution to higher prices is higher prices. It'll go so high that it'll create demand destruction and the house of cards will come crumbling down. White House risk is around 15, pretty low. Now that can change through the day. Yesterday, it started out really low and then increased into the 50s and 60s by the afternoon. So where it's at right now, that can change. There's nothing on the docket though, unlike yesterday, right, when he was supposed to speak at 1 o'clock. So as we got closer to 1, the number lifted up. There's nothing scheduled like that today. I mention often you want to look for headlines, right? Things that give you some clues. And the hurry up and wait that we talked about yesterday is starting to show up. Options market statistics. The options volume yesterday was really light. And analysts are combing through that data and suggesting that the market is entering into that hurry up and wait mode. So even if you don't know how to do that analysis yourself, headlines can help, right? Dude, that's a big bridge, bro. That's what she said. It's it's crooked. Oh, I bet it's crooked now after it got hit with a huge explosion. The call wall and the put wall moved yesterday. I shared that image this morning. Call wall rolled down, put wall rolled up, creating a little bit of a pinch scenario. Don't want to read into it too much yet because within one day it can roll back out again. So that's not overly helpful at that point. Just keep your eye on the levels because they did move. The main thing. We're still flirting with the 0 gamma level above and below, above and below. That's not helping us out that much. We're still fighting the 20-day moving average. It's this green line. So above and below, again, not really helpful. If we do break down below yesterday's low, that'll put us below the volatility trigger and set us up for some activity with the put wall. We would need to really get some expansion going, but that's the idea, level by level, right? We got the 10-day underneath us, along with the 3-day and the 3-week. So a little bit of structure here now that we were able to get back above it yesterday. We're in a little bit of a pinch scenario with the moving averages. There's the 10 and there's the 20. So we're looking at the possibility of a 10-20 cross, but we've also got a 310 surge happening. I've talked about that surge signal before. You got bearish surge and bullish surge. The idea is price crosses through the 10 and then gets above it considerably, which drags the 3 through the 10, and that's a 310 surge. To the upside, that would be bullish. To the downside, that would be bearish. If you get what we happen to have right now, which is price crossed through the 10, but then it just stalled out against the 20, the 3 doesn't really get dragged through it as quickly, and it just isn't a really good signal. It doesn't show any follow through. So we did get the 310 cross, but 3.5 days later, after crossing the 10, and more by osmosis than anything else, it just slowly absorbed itself up there. It's not helpful. So it doesn't have any value or weight to it. Overnight volume 202,000. You know, we talked a little bit about volume yesterday when it was sitting at around 80,000. And the average is 50. So, 80 sounded pretty good compared to the 50,000 that we'd normally see, and we could call it decent participation. But even though the average is in the 50s, we've been seeing 120, 150, 200,000. And so yesterday when we only had 80,000, it kind of seemed a little light. We might be in a hurry up and wait scenario, but they're getting some trades on, yeah? 200,000 in a overnight environment that should typically see 50,000 contracts traded. They're getting some work done. We did manage to get an inside day breakout. That failed, and we're back inside the range again. So what we want to focus on today, whether or not we're going to leave the range, and if we do leave the range, where are we going? Like we talked about yesterday, we don't know that this is a lower high yet. We haven't left this range to see if it's going to be our lower high. For all we know, it's just a pause, and we're going to continue to go upward. So we got to get out of this so that we can analyze whether or not we have a lower high or not. Oh yeah, we've certainly grown, huh? We're going to miss the days when a lot was only 90,000. The ADR lines for the day, we haven't hit either one yet, and without some really big headlines, it's possible that we won't hit it again today. If we are going to continue to carry this hurry up and wait mode, that's exactly what we expect, is to sit inside the range and never even get enough juice to test the edge of the range. Otherwise, getting to the red lines is the default scenario of a typical day. I'm using a 21-day average daily range. Just like it sounds, I looked back over a market month, 20 days, asking a simple question: how much does this market, and of course you can change the ticker and put whatever you want in there, how much does this ticker move on a day-to-day basis from its highest point to its lowest point? What's the average daily move? Now, if you're kind of new to all of this, if you think about something like SPY, average daily move of 1.25%, 1.5%, compared to something like Tesla, average daily move, 4%. I don't know. I'm just throwing a number out there. Tesla moves farther than SPY moves on an average daily range. So if SPY moved 7% in a day, it would trigger lock limits, right? It'd freak everybody out. Tesla moves 7% in a day and nobody cares. They just shrug their shoulders. Like, whatever. It's Tesla. What do you expect? So for every market that's out there, you have to try to figure out what's the average move of that market before you can then see that day's move and consider it a big move or an average move. For the S&P right now, 130 points a day, about 2%. That's the average ES move. So from the Globex open last night at 6 o'clock, we could move half of that to the upside and half of that to the downside. The distance between these two red lines is 1.96% or 129 points. That's it. That's our average daily range. And that's what we expect on any normal average day, right? So unless we begin to move in an unnatural way or an out of the norm, start making bigger moves than we normally would move, then that's what we should do today. Now, if we get bullish, we could move the entire ADR all the way up to that yellow line. And if we get bearish, we could move that entire ADR all the way down to this yellow line. But it would still be the average move. We just wouldn't split it between half up and half down. It would be all down or all up. It would still be an average move. The expectation right now is we won't even move the average move because we're in a compressed hurry up and wait mode, which can change based on headlines. Today's floor pivot is higher than yesterday. That's bullish. Price opened above that pivot. It's also bullish. We're above the weekly. That's bullish. We've hit the daily floor pivot, so there's no accounting or ownership. It doesn't owe us anything at this point. If we break through our Globex low, we want to challenge yesterday's low, and then we want to go for that weekly floor pivot. 65.43. Yesterday was fairly compressed, so the S&R lines for today are likely also relatively close together. 65.92 cog line for the S1 and 66.85 for R1. That would be an inside day breakout, but not overly extended. It's not a big move at this point. Getting to S1, we wouldn't even need to break outside of yesterday's range. All right, we've been putting in a lot of work down here over the last 2 weeks. We're now into our third week. This is the zone that we want to focus on. The gyrations in here, just shenanigans, right? We're just cutting the rug. So at some point we're going to get out of it. Very likely it's going to take a headline to get that done. A break to the upside should get us through that 67.50 and into this point of control from back here. It's the week ending March 20. Otherwise, if we break through the bottom side of this, which is around 6,600, we're running 50s. So 65.50, break that, we got another expansion down to 64.50. You can see the 6,500 area is pretty shallow, right? It was shallow back here, and it was shallow here. Not really a lot of structure there, but the 50s got a lot more of a footprint. All right, this is the cumulative volume index, and it's set to the NASDAQ, not the ES. It's Thinkorswim's kind of limited on the indices that you can point it to. If you're using it on TradingView, you can actually use all of the US indices. So you could put the S&P, the NASDAQ, the Dow. It's nice, much nicer than this one. We can see the volume had been negative. Just think of this as net buying or net selling. If it's pointed up, net buying. If it's pointed down, net selling. And the buying came back in pretty strong off of that low, right? Had the reversal, just picking it back up. Now we flattened out. We're in the middle of that range. So from here, we could head either direction, right? When it comes to the volume, the participation was picking back up, but zoomed out like I am, you can certainly see where the trend is going in that thing. Now we're at the 200 and we're really having a hard time with this. Both of these purple lines are the 200. Just one's the EMA and one's the SMA. It kind of proves the point that it really doesn't matter, right? At the end of the day, that's why there's two green lines, two blue lines, two orange lines. Just put them both on there and solve the old argument. Is it EMA or SMA? Who cares? I promise it don't matter. So we're dancing around that 200. We are back to it after the overshoot. And staying underneath the 200 has long-term consequences for the ES, for the S&P in general, right? So you get the S&P below the 200, a lot of longer-term analysts, I mean, there's books written about it, right? Kind of historical precedents. So we need to resolve this 200. Now, when we broke through it and we were still digesting around it, it wasn't set yet. We have to confirm all of this, right? A lot of that is going to play out on whether or not we get that lower high. So it still needs to finish giving us the signal. But it's worth keeping our eye on. Ten-day, 30-minute volume profile and TPO through the day today. We're going to go ahead and take the last of this off, so that should shorten things up by another 50 points or so. You can see it's 67.50 here, and by the end of today, maybe tomorrow, but I think today ought to get it. We'll have it down to around 6,700, unless of course we break out to the upside and we put some new footprints up there. TPO certainly looks cleaner than the volume profile at this point. We're dancing around this point of control. The value area is relatively stable, and all things considered, is kind of a tight range at this point. Lots of structure here, but over the next 4 days, 5 days, we're going to get into the candles that made this point of control, right? We're going to start eliminating these. Now, sure, we've still got all of this because we've been putting in work. But for a short period of time, we might see the point of control move away from this area. It all just depends on how much we got out of this, right? Because we have that short week, a little bit on Friday, and I mean, there was just a little bit. And then yesterday, with really a lack of participation compared to what we had been seeing. So it's possible we might see the point of control move for a day, and then it's likely to be right back up into this point again. All right, we finally took out that VPOC. It's been there for quite a while. We're done with it. No new one from yesterday, because we cut through that level multiple times last night. And really, we don't have anything on this chart or this time frame that's providing any insight. Looking at where we are at for the week, this is our weekly range. The gray line is last week's close, and we are right back where we started or where we ended the week last week. So we've gone nowhere. And since we haven't gone anywhere, our distance from the 10 is pretty much the same as where it was yesterday, whether we are looking at the 10-day or the 10-week. With the 10-week, we're about 1% below. Not much of a change from where we were. And for the 10-day, we are above it just barely. We're hovering within that 0.5% above, 0.5% below. It's kind of the imaginary collar or box. As long as we're within that zone, you'll see the pace of the tape on the SPX, the ES, all of it, the pace is different. The volatility is different. We could test the edges of that range and get 1% above or 1% below, and then you'll really start to see the volatility levels and the options change, the size of the trades that come in on the SPX, the pace of those trades, everything will really start to change at 1%. But at a half or less, it's kind of like the eye of the storm. It's a relatively calm area. All right, a lot of the market breadth this morning is negative. The benchmark we use is 0.5%. So we can see financials, technology, uranium, expanded tech or software, chips, bots, Bitcoin. That's a lot of breadth. A lot of market breadth is negative this morning. And to the upside, I mean, we really don't have much of anything. 0.5% being our benchmark, we've got nat gas and the VIX. Ooh, that's it, right? So if we do see any sort of a move today to break out and run, it's very likely not going to come from market breadth. It's not to say that you don't want to keep your eye on it, because certainly, we don't want to ignore data. But more likely, when we ask what's moving the S&P and the NASDAQ today, it's going to be the VIX and crude above and beyond everything else. And then yields, dollar, FX, treasuries, kind of stack them in order. Below treasuries, then you got the commodities. Then below that, market breadth. I think that would be the stacking order for the day. So keep your eye on the VIX and crude and headlines, of course. Market breadth and dealer positioning is going to be pretty low on my list of what's moving the markets. All in all, it's a fairly simple day. GTFO, as usual. Get out of the box before you get anything else done. That's our box right now. Yesterday's RTH is kind of a big deal. If you didn't like yesterday's trading, then you're going to hate today. Take the time to mark yesterday's range out, and as long as we're still inside of yesterday's range, you're going to have a very nasty trading day. The wings to yesterday's range is our Globex range that we have right now. They're not perfectly symmetrical, but you can see we barely got outside of yesterday's RTH low, and we reversed. That's like a 111 or a 1236 reversal. Then we got out of yesterday's high, and we reversed again a 111 or a 1236 reversal. Came right back in again. So if that's our range for today, doing the same thing as yesterday, you're very likely going to see the same sort of price action as yesterday. There's the RTH range. There's the 111 reversal with a nice 2-bar, by the way, and a 111 down here as well. Not so clean of a reversal, but there it is. GTFO, right? Get out of the box before you get anything else done, and the levels are clear. You get out of that box, aim for the red lines. It's as simple as that. If you get beyond the red lines, then aim for the yellow lines beyond that. Easy peasy, right? So what I got for you guys today, be careful, be safe,